Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, May 10th, 2016. Let's take a look at the SPY today, which again is the tracking ETF for the S&P 500. Notice how the markets have kind of got up to this area and stalled out today. They keep on trying to go higher, but so far haven't been really able to break up more than this little pivot high right around 208. And you can see 208 right here. That's exactly where we're trading, up 1% on the day. Volume, first of all, very light, so that favors the upside. But again, we're seeing a lot of resistance here. I want to show you why. I think it's amazing. You need to learn how to read charts because it literally is the difference between life and death when you're trading or investing in the markets. So first of all, zoom out a little bit on the 10-minute chart, and you can clearly see there was a gap fill from May 4th. May 4th right here that we tagged. All right, so again, notice the level right there, huge gap. We had this big gap down flush, and then we actually went down and retested the 204 master level right down here before bouncing up. But right here, this gap fill, this is what we are hitting into right now. So that's the first reason why this market is stalling out. Gap fills are a very technically important point on a chart, especially when you have a large gap. All right, if you just have a small gap, something like this from here to here, not such a big deal. But this big of a gap is a big deal because, again, what ends up happening, why gap fills are important, are because a lot of investors were buying the market right up here. They were thinking, oh, we're going to start blasting back to these highs, maybe go to the all-time highs on the S&P 500. And then they all got crushed on the way down here. So a lot of them are just breaking even now, and there's this propensity for investors to say, okay, I'm back to break even. I'm getting out of this position. It was scary. It was a bloodbath. I was underwater a massive amount. Sell, sell, sell. Take it and run. Take the money and run. Break even. That's great. All right, so that's what creates a lot of selling pressure here at gap fill. Plus, technicians like myself, chart analysts, and so forth, know that these are going to be levels, so it's almost like a self-fulfilling prophecy. However, there is another level I want to point out here that's even bigger than this gap fill, which is another reason why this market is kind of hammering on this area and having a lot of trouble breaking through. Zoom out on the chart even more, and you see a pivot top right here. Connect through this little pivot top, and look at what you get. And it happens to coincide with the gap fill. So now, granted, the volume is very light, so the market could inch up a little bit more here. But for the most part, at least short term, I'd be very surprised if this market does get much more upside into the end of the day today. And again, please notice how levels like this, when you connect a pivot high and a pivot high here, and you get a third pivot high, that's a big level. And again, think about adding that major resistance of the gap fill to that same point, and it just adds pressure or resistance, as we call it. So again, folks, I just kind of wanted to unveil this to you. I want you guys to understand and learn. Very important to understand and learn this stuff, guys. I can't stress that enough. Learn how to find these levels. They're great opportunities, not only on an intraday basis, but potentially on a swing trade basis to get in front or behind the market, whether going long or short. If it was pulling back into a level, like this 204 level right down here, I gave it to our members. I said, this is going to be a big level. You're going to get a bounce on the market off of this. And sure enough, look at the bounce we've had from 204 all the way back to 208. $4 move on the spiders. That's the equivalent of a 40-point move on the S&P 500. Now, right into this level, I also believe you should have some sort of pullback, although I don't know if it's going to be as sharp as the move up we had. It might just be a retrace, down here. Maybe it fills this gap right down here, so we come back down, fill the gap. We will watch and see. Okay? But again, bottom line is, learn your charts, read them. They are amazingly important. You get involved, you get to do this, and you will make money. All right, not necessarily every single time, because levels can fail, but 8 out of 10 times you find a good level, you will make money. All right, guys. So bottom line is, come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Get trade alerts live. Get analysis. Get daily videos. It's all there for the taking. All right, guys. Take care. Enjoy.